Today, the biggest position in my portfolio reported earnings, and it was a great day. I'm not going to lie, it was a bit of a stressful week for me this week. I'm talking about Nebius, of course, and right now Nebius is about 60% of my portfolio in Robinhood. It's my kind of swing trading, mid to long term portfolio, I would say. And so, yeah, I was happy to see that the earnings results came out and were positive this week. So today in the video, I want to go through a little bit deeper of the stock and what they reported in the earnings for this quarter. And then I'll go through how I've been trading it both from a long-term perspective and from a day trading perspective. And then I'll also share my thoughts on the AI trade and if I think it's over. Am I just selling everything and taking profit, or do I think is more upside to be had with the AI trade? So let's get into it. You can see here, Nebius has been on a tear if you zoom out a bit. It's a little bit down today, but it was up over 30% after reporting earnings. Got a little bit of a move after CoreWeave reported earnings, actually, because CoreWeave signaled that the AI trade was alive and well. And then Nebius came out and just confirmed that with their earnings. So you can see Nebius is up about 30% over the last 5 days, but it was actually up over 30% after they reported earnings on that day. And then if you zoom out, year to date, it's up almost 200% over the last year. Nebius is up over 200%. So this stock has been performing particularly well. But let's dive into the earnings and see why Nebius was up this week. So you can see that Nebius pretty much crushed it across the board. Their revenue was up 454% year over year. EPS was better than expected, still negative, but up 68% year over year. Their ARR was up. Their AI cloud adjusted EBITDA margin grew from 24% in Q4 of 2025 to 50% this last quarter. Their contracted power guidance increased 5x since August of last year. Their capacity is expanding globally in the US and Europe. And I think they gave a little bit of commentary on the Vineland data center, which has been a little bit of a point of contention here in America. People are protesting data centers, and I think there's concern that Vineland data center would be delayed, which is, I think, a huge part of their contract with Microsoft. But I think they gave every indication that the Vineland situation is still on track, and they confirmed their guidance for fiscal year of 2026. But something that is important that I wanted to look at as well is their ACV per megawatt is also increasing. So their ACV per megawatt is basically how much they can charge for their capacity. So typically when we talk about data centers, we measure things in terms of megawatts, which is how much power they bring into the data center. And so if you can see here that in 2026, the base was around $10 to $12 million per megawatt. They closed some deals in Q2 around $20 million per megawatt. And they're also reserving some of their capacity for short-term deals at around $40 million per megawatt. So basically they're signaling that they could sell all of their capacity for 2027, but they're actually reserving some of that capacity because they think they'll be able to actually charge more per megawatt for that capacity. And they're also running some auctions. So basically the highest bidder will be able to come in and get short-term capacity at a higher price. So all of this is very bullish for Nebius and NeoClouds, and really just shows that we're still very early in this build out. Of course, you have some folks like Michael Burry who are short on Nebius and the AI trade in general. But I think it's a big misunderstanding in terms of where we are within this cycle. I think they're comparing the AI build out, the AI cycle to the 2008 housing crisis and the dot-com boom. But I think there are some key differences here. And I think AI is just such a transformational technology that we're still so early in the adoption curve of AI. When you think about just anecdotally, right, the average person is using ChatGPT for just answering basic queries, basically as a Google replacement. We haven't even gotten into full agentic adoption where the average person will have a personal assistant that is running 24/7 and just doing things on their behalf, and you need compute for that. Or the average business adopting AI into their business and being able to automate workflows or automate more tasks in their business. Obviously, corporations are starting to adopt AI, but I think we're still, early, like less than 10% adoption when it comes to AI. And then if you look even more out, we have robotics, we have driverless cars, we have all sorts of things that will just increase demand for AI. And we're still capacity constrained. We're still seeing all of these bottlenecks. And so I think these companies in the AI trade will continue to beat and raise and just report blowout earnings, at least for the next couple years. So that's why I remain very bullish on Nebius. But let's dive into a little bit how I've been trading Nebius. I mentioned I'm doing both kind of short and long term. And Nebius is actually the first stock that I traded the will strategy on. So I may have gotten a little bit lucky here. And if you're not familiar with the will strategy, basically what the will strategy is, you sell puts, you get assigned, 100 shares per option that you sell, and you take ownership of those shares. And then you turn around and you sell calls against that position to generate income, to generate premium. And you may let those shares get called away, or you may just continue to, roll up and out and move up to a higher strike and never actually plan to sell those shares and just continue to collect premium on your position. So you can see here, I actually started selling puts on Nebius in September of last year, and it actually worked out really well. Nebius, you can see here on the chart, basically traded in a range between about $80 to $100 for a few months, going back to September up through around April of this year when it broke out. And so this entire time, I was just repeatedly selling calls against my position and just collecting premium. So I probably collected a few $1,000s just in premium against my position. Now, in hindsight, I probably could have juiced this even more. I could have let those shares get called away and then bought back in, bought the dip when it came back to this demand around $80, $85, and then kept doing the same thing all over again. But I just held on to the shares, and I think for my first time doing the will strategy, it actually worked out pretty well and actually made me really excited to continue to do that. Now, I could do a whole separate video on the will strategy and some other stocks I'm doing the will strategy on and kind of the pros and cons of it. So let me know in the comments if you want to see more about that. There's also some other good videos on YouTube about the will strategy as well. But I basically did that for a couple months. And then I did eventually get kind of caught with my pants down a little bit when Nebius eventually broke out to the upside. You can see we broke out of this range around April, and I had a short call position. I had sold a call around 115, I believe. And so I was underwater on this position, and I probably could have closed it out on this pullback. And, obviously hindsight is 2020. I could have done a lot of things differently, but I just kind of sat and watched Nebius continue to rally higher and higher, realizing I had basically capped my upside, which is one potential, downside of selling calls is you have to sell it at a price that you're actually willing to share or willing to sell those shares, or you have to be willing to roll your position up and out. And so that's what I did is I basically locked in or realized a quick loss on that 115 call, and then I kept rolling my position up and out and getting more time and rolling up to a higher strike. Eventually I rolled up to, I think, a 195 call, and Nebius just continued to rally and went up to almost $300 or right around $300. So that was kind of tough. I'm not going to lie, to just sit there and realize that, my upside had potentially been or essentially been capped. But, you live and you learn. And I think I probably didn't handle it the best way. I ended up buying back, one of those calls at a loss. And, I did eventually sell another call and kind of wrote that down as Nebius did pull back. And then I ended up locking in some profit on that position as well. But, probably could have handled things differently. Also did sell another put on Nebius, and I ended up getting assigned at 275. So obviously we pulled back quite a bit from 275 over the following weeks. And so I had to watch a lot of my upside get eroded. But because of my entry point in the 80s, I still had a pretty good cost basis. I think my cost basis is around 175. So, I was able to hold in the position, and I didn't have leverage or anything like that where I would have gotten margin called away. So I just held the position. I still was bullish. I held it through the Leopold situation. I held it through the Michael Burry shorting situation, the AI trade fears, and I just kind of remained bullish in the stock. And hindsight, I wish I would have maybe bought even more shares when we pulled back towards the 200 SMA. That's usually a good place to buy into a stock. But I just held on my position and sold some more calls. And so I sold one call before earnings this week at 275. And then after earnings, when we got that rally, I sold another call at 300. So my position right now in terms of my long term, I have 200 shares and I sold two calls. And if Nebius rallies, we're already back up to 275. So I'm pretty much, break even on that second batch of shares that I purchased already. And I think up about 30 or 40% on my position overall. And I think this time I'll just let those shares get called away if we do close over 275 or over 300. I think my position or those calls expire at the end of next week. So we'll see. Maybe we pull back. You can see here today we hit some resistance around 277 and Nebius pulled back. Maybe we kind of consolidate in this new range and then we push higher after that. So we'll see what happens. But I think this time I'm not going to try to roll it. I'm not going to try to buy back the calls at a loss, which I am underwater on those calls. But I think I'll just let those shares get called away, lock in the profit, and then I'll just buy back in, assuming the Nebius continues to, or assuming I continue to be bullish on Nebius. So let's jump into the day trades that I took. As I mentioned, I've been trading Nebius both in the long-term portfolio as well as taking some intraday trades on Nebius. And so you can see here, this was after earnings yesterday. Nebius rallied in the pre-market, and it actually rallied the day before just based off of the CoreWeave earnings. But then we saw Nebius push up into this supply area. And if I go back to the longer term chart, you can see here there's this previous supply right around 231 going all the way back a few months. And Nebius had pushed up into that level and had hit that resistance and sold off, rejected that level a few times previously. So I was definitely watching to see how Nebius will react at that level. And we pushed up into it, consolidated right underneath the level at around 231. And then we broke out above it, pulled back, retested the level, and then moved higher. So I was definitely watching this, and it was a little bit messy of a trade. It wasn't as clean as maybe it could have been. In hindsight, it looks very clean, but I think I entered a little bit too early. And so I entered around, I think 236, and I was trading options. And so I had to sit through quite a bit of drawdown. I was down maybe 30, 40% as we pulled back into this overnight high. But I definitely wanted to give it that level, and the structure of the trade remained intact. So I definitely wanted to stay in the trade until at least we broke this overnight high. So I almost got stopped out. I was like a penny away from getting stopped out. But one of the things that I've noticed that's nice about Nebius, I haven't day traded Nebius as much. I've mostly just been doing the will strategy. But one thing I've noticed is Nebius does hold the levels pretty well. When it pulls back, you can see it pulled back to the overnight high and held that level to the penny and then pushed off. And I've noticed it does that quite a bit. So in terms of using higher time frame levels on Nebius, that does seem to work pretty well. And I'll continue to look for that opportunity and see if those trades continue to play out. But I mentioned I had some drawdown, and so I was very happy to see that we held that level and then we pushed back up towards my break even. And I think I got stopped out of my last position probably around 240, which of course, I'm kicking myself for now because eventually Nebius did break out and rallied all the way up to 264, which was, that was just an insane move. and I got actually a decent entry in hindsight, but I just didn't have the conviction to hold. Once we got back to break even after me sitting through that drawdown and me being in this trade for over an hour, I just took profit at that initial target around 241, and just locked up profit. In hindsight, I wish I would have just held the position and let it just rally all day. But this is one of those trades where I would have had to just walk away for the day and then come back and see that I was up. But it's always hard to catch the full move. At least I got some intraday action in addition to my will strategy, in addition to my shares appreciating as well. And so because I had the long-term position, that allowed me to feel a little bit easier about taking profit on the intraday position, knowing that if we did continue higher, that my longer-term position would continue to rally as well. And then coming into today, I traded Nebius again. We consolidated in the pre-market, and we had pulled back a little bit in the overnight session, just below the previous day high and the previous day close. But then right off of the open, we rallied and reclaimed the 264 level, which is where we had rejected the previous day. And we started to consolidate above this level. At the same time, we got PPI that came out this morning. And so based off of that data, which I think inflation came in, I think in line with expectations or maybe even a little bit lower than expectations, that caused the overall market to rally. And so I was definitely looking for more of an upside push here, but I was also cautious because Nebius has rallied quite a bit already this week. But this just looked like such a clean setup. And again, Nebius did the same thing it did yesterday. It rallied above the overnight high, pulled back into it, held that level, and then pushed off and made another move higher. Now, I was hoping for a lot more on this trade, didn't get too much out of it, and at the same time, I did chase it a little bit. I was a little bit late to the trade, and I entered closer to the high of day, around maybe 270. And so once again, I had to sit through a lot of drawdown, especially with options, as we pulled back to this overnight high. But same as yesterday, I definitely wanted to wait and give it that level. And structurally, the trade was still intact. And so I didn't want to get stopped out prematurely and take a loss where I didn't need to. And that turned out to work pretty well again today. Once again, I was within pennies again and stopped out. So that's definitely not something I want to make a habit of. I think going forward, I definitely want to be a little bit more patient. And if I just waited for this pullback after 10 a.m., I would have had a much better position, and I would have made a lot more from this trade. But that's just a lesson that I'll carry forward. And then I scaled out into this move as we pushed higher up towards 277 and got stopped out. And then Nebius continued to trade lower after that. So really happy with these trades, really happy with Nebius this week. And I'm continuing to stay long. As I mentioned, I think we're still very early in this AI build out cycle. And I think Nebius is still well positioned to take advantage. I think, we're still going to be capacity constrained, and Nebius is one of the few players that can bring more capacity online. And I think as AI demand continues to grow, I think the AI trade will remain intact. It must suck for Leopold and some of the other guys. He just got stopped out, and then now his I think Nebius was also maybe one of his largest positions, and to see the stock rally and have one of the best days ever right after you are forced to sell at the bottom, that must be a tough lesson. But either way, I'm glad I'm still in a position. I think we are definitely headed towards at least 300 in the short term. Again, not financial advice. This is just my own personal trade and my own personal portfolio. I didn't expect that we would almost get to 300 already this week. Again, I sold calls for next week, but we'll see what happens. I'll keep an eye on this. So let me know if you want to hear more about this. Go ahead and subscribe and leave me a comment if you're interested in learning more about the wheel strategy or any other stocks that I'm trading, or how I kind of set up my intraday trading strategies as well, and what I look for during intraday trades. And hopefully this was useful to someone. Again, not financial advice, just here trying to make some money and share what I learned.